Hello, everyone. Welcome to Carta's State of Private Markets End of Year Predictions virtual event. My name is Peter Walker. I run the Insights team here at Carta, and I'm super excited to share some of the data that we've been looking at on what's going on with startups and maybe make some educated guesses about what's going to happen next year as well. Um, I'm thrilled that I am joined today by the newest member of our Insights team here at Carta, Ashley Neville. Ashley, how are you?
Great.
Maybe give a little bit of background on yourself for the audience, just so people feel like they know us a little bit more.
Yeah. So I am a data person at heart. I love data. I come to Carta from 11 years at Tableau, where I both was an expert in how to use Tableau, help companies of all size use data better. But I did a lot of speaking on behalf of the company. So I'm really excited to join Carta that has such a wealth of data. It's really quite unique. And to join Peter's team and getting to spend time with all of you.
Yeah, it's fantastic. Ashley's already made a major impact here with us here at Carta. So we're on a mission to collect more and more wonderful data nerds together. But with that, let's jump into the numbers. So the data that we're going to be going through today comes from a couple different places. The first place is our State of Private Markets report, which covers everything Carta knows about priced equity rounds that are happening to US startups over the last, say, 6 years or so. And the second is our pre-seed report. So we also have a ton of data on what's going on with startups that are fundraising on safes or convertible notes before they ever get to priced equity, the earliest part of the fundraising journey. So we're going to touch on both of those. Of course, we love to kick things off with an exciting legal disclaimer that's required. I hope you've all read that. Fantastic. And we're going to start off with this first section on fundraising pace and terms. So Ashley, I'm going to kick it over to you for maybe going through these first couple charts here.
Awesome. So for the last 9 consecutive quarters, private startups on Carta have raised between 15.7 billion and 23.8 billion. And last quarter, Q3, really fell right in the middle. So 20.1 billion, with deal counts ranging around 1,250. And we expect to see a little bit more come in, but we don't expect this quarter to be a sort of major blowout, nor do we expect it to sort of be really underperforming. And really, this is showing a stable trend, which was in contrast to the volatile pandemic boom period. And we'll talk about that a little bit more later. But you can really see that sort of consistency in the numbers.
Yeah, I think when we talk to founders, one of the things they always ask us is, when are things going to pop back, right? When are we going to get back to the boom times? And I think it's kind of required of us to be honest about this. I just don't think that 2021 is coming back anytime soon. So if you're a founder on the call and you're wondering when is the right time to kick off my fundraising, yes, there's some discussion to be had about seasonality and things like that. Like I probably wouldn't start it the week of the Christmas break. But if you're waiting for something to change on the macro terms around startups, I'd say just go now, because we're not going to get that much better. I don't think this is going to get worse, but we're just not going to approach the numbers that we saw in 2021 anytime soon.
Yeah. And I think it's sort of interesting also to note that if you look over the last several quarters, it goes up, down, up, down, up, down, up, down. So right. I think it's really hard to sort of read into a quarter that's up right now, saying that the following quarter is going to be up. I think you got a 50-50 chance that the next quarter will perform higher or lower.
Exactly. So, time those fundraisers to the momentum of your business, as opposed to trying to tie them to some external factor that we can't really predict very well. Mm-hmm. All right. So that's Q3 as at the moment. Maybe to take us through like what it looked like if we break this out by series.
Yeah. So if we break out from series, we've got price seed all the way on the left and series E all the way on the right. And overall, the trend is that as you become more mature in your series, we're actually seeing a slightly better performance in the market. We saw a 22% decline from the previous quarter in priced seed. So price seed was down a little. Series A dropped about 26%. But the median valuations, and you can't see this on here yet, but those median valuations actually went up a little. So sort of some interesting nuance that's going on in the market. When you look at sort of Series D on the more mature side, we saw the highest number of transactions. It's sort of the little bar down at the bottom. It's sort of hard to see. We have a bigger one later. But 43 deals. So highest so far this year, and actually I think in 2 years. And then Series E saw a slight increase in deal activity as well. So they were at 28 transactions.
Yeah, and I think as we go through some of these numbers, again, I thought that this chart that you put together was really like illustrative. If you simply remove 2021 from all these figures, which of course is difficult to do in our minds and not actually reality, then a lot of these trends look a lot better, right? So comparing yourself against the sugar high of 21 makes for some difficult comparisons. But if you simply compare to the last quote unquote normal market we had, things look a lot more copacetic. All right, so let's jump into the early round stuff. This is where a lot of the discussion around venture is usually focused: pre-seed, seed, and Series A. So what are the key things we should know about this one?
So as I said a moment ago, what we actually saw in both pre-seed and Series A was a decline both in deal count and cash raised. And I believe the median valuation was down as well. So sort of a slower quarter overall for early stage rounds.
Yeah. And then we saw kind of a perking back up, I would say, of growth rounds. So, oftentimes people segment the market from C to A as early, B to C as growth, and then anything from D and beyond as late stage or pre-IPO. The growth rounds seem to be kind of, again, steady as she goes a little bit, maybe a little bit of increase here in the total cash raised and the total round sizes. So, the sort of frozenness of the middle part of the market that we saw a year or two ago seems to be thawing maybe just slightly.
Yeah. And I think we were up 10% in Series B and down about 10% in Series C. And so it's just sort of a comparable quarter to last quarter. I think we'll get a couple of more deals in and we might end up landing right at last quarter in Series C. But, no news is good news, I think, in a way.
I think that's true. Yeah, that's well said. Okay, and then this one, for the founders on the call, is always something that people are tracking very closely, just illustrating how long it's taking between these rounds. So anything that jumped out to you here?
Well, we're seeing an upswing in that Series A to Series B. Like if you look at that line, that's been a slow and steady climb up quarter over quarter. We're sort of maybe seeing a little plateauing in price to Series A and Series B to Series C. But that Series A to Series B seems like it's really increasing from 2 years, a couple of quarters ago, up to over 2.5 now. And I think that just speaks to, and we'll see this in the nuance of the data later, that founders are getting a little bit more creative with their fundraising. They're having to maybe accept terms that they hadn't wanted to, particularly if they're running out of cash. We're seeing an uptick in M&A. So people are more open to exit scenarios than maybe they were previously. So it's sort of a hard time to be in that growth stage right now, I think.
Yeah, definitely. This is reflective, obviously, of a lot of different dynamics around when these companies raised and how far they were able to get on that initial fundraise. But you're definitely right to say that, creative financing, the terms that the founder is less excited about, they're a bit more common these days than they were in the boom times, illustrated, of course, by down rounds, which is everyone's least favorite kind of round, being at kind of close to record highs, unfortunately. I was pretty hopeful that decline from Q1 to Q2 of this year was going to hold, but we bounced back up to about 20% of rounds as a down rounds.
Yeah. And it's I think it's almost 10 quarters straight of increasing growth. So in down rounds as a share. So, it sort of seems that we're at a new normal for what a down round might be. I think we want to say it's near high, but maybe Q1 was a little bit of a fluke and we're going to settle in about that 20%.
Yeah. Well said. Mariah, the question, and I should have mentioned, y'all, throw questions into the chat, throw them into the Q&A. We're happy to weave them into the conversation as we keep going. Mariah has a question here about what was the reason for this spike in down rounds in Q2 of 2020. 2020. So that's 2020, not 2021, which I think tells you the story. That's when COVID began. Everyone was in their homes. It was kind of a really worrisome time for startups. And then very quickly we got into some, roaring 20s area here, and then back up for the more recent times.